mortgage commandments, do's and don'ts to put yourself in the best position possible.
Yes. Do ask questions when in doubt. Always ask questions. There is no, I know in school teachers would say there's no dumb questions and then you get laughed at. That's not the case. We're all adults now. Ask questions.
There are no dumb questions.
There are no dumb questions. But yes, the changing of the jobs, be careful with that. That I have as number one. Because it's happened a lot. So if you do change a job, make sure if you're going W-2 to W-2, it's in the same industry or somewhat in the same industry. I was a marketing director for a real estate company. Now I'm a marketing director for a food company. It's still a marketing director, so we're good, right?
Basically, don't change the damn job.
That's the easiest thing. But sometimes I've had clients have an opportunity that's too good to pass up, right? But if opportunity knocks, just
leave it on the doorstep and get the hell out of here.
There's little scene going on right now.
Opportunity, I'll take it.
I love it. But yes, just get an employment contract, and that will suffice. So
that's good to know. So
yes.
if you have like an offer letter, that you can use that.
Then that is golden.
All right.
Yeah.
So that's one.
But like you said, don't go self-employed.
Please don't go self-employed. Wait till after you buy your house and have, as a business owner, we know, have a business plan. This isn't my forte, but I'm just telling you, like as a business owner, do your homework, have a business plan, have your reserves, have your budget, do all of that, because I love to see people succeed in self-employment. I am a big proponent of that. I love it. So that would be the one thing. If you do get an opportunity for a job, secure a contract and then just give me the contract and I can fly with that. The debt to income ratio, number 2 is, we live in LA. Well, we do. But people's cars break down. We drive a lot. We're a very mobile society.
Yes.
All over the United States, and so, oh no, I need a new car. Well, no, don't do that.
You don't need a new car right now.
Don't celebrate your new house with your new car.
Well, you can, but after it closes, not during, because remember, back to the debt to income ratio. Every single debt is going to bring up your debt to income ratio, and we want to keep that debt to income ratio as low as possible.
Get the garage, secure the garage before the car.
Yes.
And people might not know this, but they do pull credit again, even after approval. Before it closes, they will pull credit again.
They do pull credit to make sure that you haven't secured any new debt. If there are more inquiries on the credit report, they'll have you attest that you didn't secure that was just, you were thinking about it. I've had people right at the close of escrow go and put all of their appliances and new furniture and everything and on new credit cards, because if you secure a credit card, then you can save 10% off this order. Well, that doesn't make up for what it's going to cost you in your mortgage.
So everything that you're trying to, whether, furniture, car obviously is a no-no, but appliances, all this stuff, just wait until after.
Or ask me, because some people's debt to income ratio is low enough to withstand that, and then that's fine. There are others that we're really at that precipice, and that can set us over.
Well, I feel like, especially in Southern California, no matter how much you make, you're always shopping at the very, very highest point you can afford, right? Because you're always looking, well, if I spend another $100,000, what kind of house can I get? So I feel like no matter what, you're always going to be right at that edge of the
cusp.
Yeah.
Yeah, especially with the debt to income ratio limitations. The reason why there are debt to income ratio limitations is they don't want you to default, right? They want you to be able to afford your home and not be overly stressed and that. So there is a a loving and safety reason for debt to income ratios, you know,
to protect you.
Yes, it's a two-way street.
Set you up for success.
Yes.
You know.
So what happens if my credit score drops?
That's happened because if you are shopping for appliances or cars and you're running your credit, and unlike mortgages where you have a few, you know, inquiries where it doesn't significantly drop your credit, if you're applying to all these different things, your credit score can drop significantly. And what that does is that will do a couple of things. That will either, depending on your original credit score, take you out of the game. It will, or make us go into a more high risk loan. Whereas maybe FHA, where you have mortgage insurance, even though you have a down payment, right? So because they cater to 580 credit scores, lower credit scores. So to give homeownership availability to everyone, which I am a huge proponent of. But what can happen is if your score drops, your program can change, your interest rate can go up, your down payment can, you know, need to be more. I mean, there's so many things. So communication. I always tell my clients, tell me everything. I am your advocate. I am the gatekeeper. I look at everything and then I'm the artist. You give me all of the paint. You give me all of the information. Then I paint the Monet and I give it to the underwriter. And the underwriter is the art critic.
We've got a professional here.
And they're like, I love this piece of art. And I'm like, great. And then they're like, you're approved. So, but I need to know everything because some people just they're afraid, oh no, if I say this, then I'm not going to get approved. No, then I can know the actual situation and help overcome that.
And we said that with Daniel when we were talking to him too. It's like TMI in this situation is a very good thing.
That is a very good thing. Yep, as much information as possible.
If they give you information you don't need it.
That's right.
But give it all.
Give it all.
There's no surprises.
And I am the least judgmental person on the planet. I am a safe haven. I've seen it all. I've been through most of it. So
I'm sure it's all in your diary, though. You're like, oh my gosh, can you believe what I saw?
That'll be the next episodes.
But I think that's a big fear is people think that either they're going to be judged on it or they just feel like it's their private information that they don't want out. Yeah. So it's good to know that, you know, you're here only to help. That's it.
Only to help. That is my role, is their advocate. I am not where you typically walk into a bank and you tell them and they're like, okay, what is that? And then they report it to the end. No, this is different. Okay. So I like to pride myself on being all of my clients' advocate.
Love it. Yeah. All right, what's number 3?
Number 3.
We kind of went over that, charging credit cards excessively. So, you know, just the debt to income ratio. Just try not to do it.
Don't open that Kohl's credit card.
Don't open Kohl's
when they ask you, say no.
Yes, I know. Say thank you, but no thank you. And also, you know, in part of my evaluation of credit card debt for my clients, I will tell them, listen, you're a little bit above the threshold. If we pay it down this much, your score will jump up by X, which will then put you into the next beneficial rate level and save you money. So I always advise my clients on that too. But while we're in it, try not to use it unless you ask me.
So far, every time when we're talking about each point, it's always just defer to Jodi. Just talk to your lender because they're going to help you navigate and they will. Because everybody...
A good lender will. A good lender will. A good lender that knows what they're doing. The thing with me, I am a little bit of a control freak, a type A personality. And when someone says they're a little, that usually means they're a lot, because that's all there is. That's true. But yes, I mean, let me know everything, because I also have been an underwriter. I've been a processor. I'm a loan officer. I manage. I know every aspect and every facet and what that looks like of this profession. And that enables me to help the clients. So I can analyze the credit cards and let you know, okay, let's do this. That'll put you in a better position. So yeah, that's don't charge excessively on your credit cards unless you ask me first. This one seems obvious, number 4. But sometimes, life happens and we've set aside money for our down payment, and I've given you an estimated closing costs with about, because you have title, you have escrow, you have you have homeowners insurance now that you're going to have to get, property taxes. So there's these closing costs that are factored into it, in addition to your down payment. And so I always like to give my clients very, as close to possible. And obviously, you guys are the realtors and know that I think most of the time the sellers choose the servicers, and so it just depends.
As of late.
As
the
from
last
time
decade, yeah.
Yeah. Or longer, little.
Yeah, so it does vary, but it is close. It's on average, right? I give them averages. So they'll save that money, and then the closing comes, and they said, well, you didn't tell me to use my credit card, so I didn't want to use the credit card, so I used the cash. And now I don't have the down payment. And so then I have to look at that. Well, fortunately, like I said, I'm a problem solver, and we do allow gift of funds. So mom, dad, uncle, auntie, whatever. So there have been situations where people have had to, at the last minute, have some gift of funds because they spent money that they had set aside for closing. So really try to avoid spending that money. Pretend it's not there. And also, when you have money, keep it in the bank. A lot of people will want to save it and not touch it and keep it in a safe or a safety deposit box.
Or the mattress.
Or the mattress.
That's what I was thinking.
That's where it comes from, isn't it? No.
I just
Or
sent
the
pictures
couch
of cash as
cushions.
proof of funds, right?
Piles of bills.
Didn't you guys say someone had photocopied a...
Wait, someone.
There's a photo of a bunch of money. Like, here's my
Yes,
proof of funds.
Oh,
that's
that is
happened
not
to
legal. It's
me.
not proof of funds.
No, that's not proof of funds. I literally had somebody photocopy all their money. Yes. Yes, I had them photo. I'm like, that it doesn't work. They're not going to take it because you could spend it after you photocopy it.
What about for a non-qualified loan?
For a non-qualified loan, photocopies are not accepted either.
Least qualified.
Have just a video of me making it.
Yeah, making it rain, have one of those guns. No, but yeah, so usually on conventional loans, we only need 2 months bank statements. So keep your money in your bank. If you have a lot, part of the preparation work for purchasing a house can be, let me deposit all that money into the bank. Because any large deposits, we have to source. Okay, so we have to find out, where did that come from? Okay, you're W-2'd, you make X a month, but now you just deposited $5,000, $10,000, $20,000, who knows how much. And we have to source I don't know where that came from. I've just been withdrawing it over the years, and that's not going to be able to be used.
So I think that's another good point to make. So for someone that just wants to buy a house and they don't know where to start, the first place to be would just to start putting your money into the bank.
Put money into your bank. Have that source, because you don't need to source it after it's been 2 months there, right?
I was going to ask is how long do you have
2
to go
months.
back to source?
2 months. They only ask for 2 months bank statements on conventional loans. And if you're self-employed and you're on a cash business or whatnot, that's easy because you're self-employed and part of it is the deposits that we make, and that's easier to explain. But when you're W-2'd and you're depositing cash, there's a few reasons why. There's anti-money laundering laws, which is one of the reasons why we have to source funds. And they want to make sure it's not a loan. You didn't borrow it, which would then increase your debt to income ratio. And so there's so many reasons why. So put that money in your bank as soon as possible so you have it, and it doesn't need to be sourced then. So that's that.
Number 5.
Number 5. Let's see. Well, I take care of number 5 for you. On the loan application, it says I've kind of streamlined number 5 because now I have an automated system where I pull your credit and it auto generates your debt. So you don't even need to list out your debt. Number 5 was don't omit any liabilities. Well, I'll have your liabilities, so it's okay. Did you?
Oh no,
Okay.
I'm doing the numbers.
Okay, so don't worry about number 5. I take care of that for you. I try to on the loan application. There's only a few sections that you have to fill out, which is the first part, which is your name and your address for the last 2 years. If you own or rent, how much you pay. And then your employment and the rest. And then there's questions at the end. Have you filed bankruptcy? Which is okay if you filed bankruptcy. We just need to know what type was it, 713, what was it? Get the discharge documents, and that's okay. But there's all these questions at the end. So other than that, usually the loan application is a few pages, like 5 pages long. I only have my clients fill out the first couple of sections, and then the rest is auto-generated from their credit report. So it's pretty easy. And also the documentations that I get. I want to calculate your income. I need to calculate your income off of the documentation. I'm not going to leave that up to the clients because there's a formula that is used to establish qualifying income, which is different than what you may see on your piece of paper.
The 10 Commandments, Part 2.
So we are going to start with, thou shalt not buy furniture and appliances on credit card before the close of escrow. We touched on this on part 1. And the reason for that is because added debt is added liabilities. Added liabilities increase the debt to income ratio. Increased debt to income ratio impacts your purchasing power. And we don't want that. So don't do it.
Yeah.
Unless you ask me, because sometimes you can, but ask me first.
Ask Mama Jodi first.
Ask Mama Jodi. The next one, again, we touched a little bit on this on number 1, is thou shalt not originate inquiries on your credit report because they can bring down your credit score. So you don't want to go in and apply for things. Also, if you're like, oh, Jodi said don't apply for anything. But, oh, honey, you need a cosigner on your car? No problem. No, that's still your debt. That's still your debt. No co-signing, no co-applicators, no co-applications, no co-anything. No. So that's a little clarification.
It's a good way to get out of paying for your relatives.
Exactly.
I can't co-sign for you. So I'm buying a house.
I'm buying a house. Now, if you've already done it, I have a solution, but it's just going to take time. So if you are a co-signer or a co-applicant or an authorized user, all you need to do is to provide 6 to 12 months of the paying parties' proof of payment from their bank statements, showing, hey, I'm not paying this. I've never paid this. This person's paying it. I just co-signed. Then we can actually exclude the debt. So there is a way around it, but that's why I keep saying communicate. That's, when we communicate, we can find solutions together. Okay, so then large deposits or large withdrawals, don't do them. Just because we have to source them and then you have to document them. It's more trouble than it's worth. So again, if you have money in your closet, in your safe, under your floorboards, in your crawl space, refrigerator, freezer, wherever, put it into the bank and as soon as possible.
Rule of thumb is if you have that mattress money, if you have that somewhere, you're 2 months away from applying for a loan.
Yes.
So start the process early.
Yep.
Right? If you happen to have $60K and you're under your bed, get it into the bank.
Get it into the bank.
Then you're 2 months away.
Yep. Then you won't have to, what we call paper trail it. You don't have to source it. You don't have to say, well, okay, I took $500 out and cash it in ATM, and then it's going to drive you nuts. So
would you suggest someone, if I have 60 grand, I put the whole 60 grand in, or should I do like a $15,000 increment? Like, how would it be best?
Tony Soprano would have the
that's
perfect.
That's why I'm smiling. I'm like, well, there's some federal regulations
I got
to it.
$10,000 or I want to put $999,000.
Get in the back with the mortadell.
Get rid of the body.
Back with the body.
You got it, right? Was that clear? It was kind of not clear.
Yes, we got it.
Okay. Laura's like, okay. So yeah.
I'm just gonna scratch that whole part, guys.
What are we talking about?
I'm blushing now. I don't even know why. Oh my goodness.
Just find a way.
Yes. Deposit it. Okay. This is so good. Don't change bank accounts. You're just going to make it harder on yourself because we need bank statements. And if you change your bank in the middle of escrow, then you're going to have to show your old bank account and then transferring the funds and then your new bank statement, and just try to be as uniform in your life as possible. It will make things so much easier on you, the homeowner, the potential homeowner, the interested home buyer. And I like people to like me, and I like my clients to be happy with me. And sometimes they get frustrated if I have to keep asking, I need this documentation now because you did this.
Because your last documentation now triggered a request for this documentation.
So it's really saving the home buyer or borrower like a lot of stress and time and hassle.
Absolutely. A lot of stress and hassle. Yeah, absolutely. And time is something that we're all in short supply of. So the easier we can make it, the better, So don't switch bank accounts. This is number 10.
Number
And
10.
we kind of touched on that. Don't co-sign for a loan. It's the same as you having the debt yourself. That's why it reports on your credit report. So if you do, just know if once you co-sign, you're gonna be 6 to 12 months out from buying your house.
Ouch.
Yeah. Because
And that can mean a lot in this market.
Yeah, things change so much in such a short time
With
period.
rates, with prices, that could be.
And if I've had people co-sign and they have a shared bank account, well then how do you prove who's paying it?
Mm-hmm.
Now we're in a whole nother problem. Then I have to go and say, okay, how did you send the payment? Oh, I wrote a check. Oh, great. Did you sign it or did the other party sign it from your joint bank account? I signed it. Well, then, or the other party, we're in luck. Okay, I can show that signature and then, show that they paid it. But there's all these little, as you can tell, it's exhausting. So just don't do it. It'll just save.
Or just wait. Just wait.
After you're done, purchasing your house or refinance.
And then you can do whatever you want.
Whatever you want.
There's a really good movie I just saw. It was pretty good. No Sudden Moves. I feel like that's a good.
That is, oh my gosh. This should be the title for our episode.
No Sudden Moves.
I'm gonna say no move.
No moves without my
Keep doing the
express
same thing.
permission.
Smooth moves. No.
No.
Sudden moves. Just no moves.
No moves, just consistency of flow. You worked so hard and you got here. You were doing something right. Don't change anything. Keep doing things right. So that's ultimately what it is.
don't have a midlife crisis.
But if you do, you can call me. Trust me, I've had those calls too. I talk people down from buying Lamborghinis a lot.
You have like that virtual couch that they can all lay on.
Oh, absolutely. The soothing music in the back.
Count back from 10.
Yes, let's breathe. Let's do our breathing exercises.
Woosah. And with that being said, guys, that was the second half of the 10 Commandments. Thank you again.
Thank you, guys.
So we're gonna put your contact information in the description below. But where can people find you? How can they reach out to you?
Through our website at omnifundla.com, through my email, which we'll have the link to. I have Facebook, which I'll give you guys, Jodi Gonzales Consulting, here on YouTube. So hopefully I'll be here a lot. My phone number, you guys can list on there. It's my work number. It's text capable. So everybody just ask me questions. I'll spend my day just answering